This is Lisa Miller and Associates, Florida Insurance Roundup, your podcast on the people, issues, and regulations shaping Florida's insurance market. Now, here's Lisa Miller.
Welcome, friends. If you've been reading some of the Florida newspapers and websites over the last few weeks, you may have seen the fuss over managing general agents, commonly called an MGA. An MGA helps an insurance company by carrying out certain key functions that an insurance company chooses not to do internally. This can include many things such as underwriting, arranging reinsurance, claims paying personnel, and even issuing actual policies, all very important administrative support. For those of you that may have not had a chance to follow some of the press stories, even going back to October and November, there were sensational headlines about insurance companies not paying claims and how Helene and Milton survivors were struggling to get their claims paid. And when you looked underneath the covers, and unfortunately these details did not make those stories, it was very clear that many of these claims were flood claims, or many of these claims were under the deductible. And in fact, the head of Citizens Property Insurance, Tim Serio, did a very deep dive in their December Board of Directors meeting and showed clearly the percentages of claims that were under the deductible or flood claims. But for some reason, those details did not make the news. Fast forward to an article that appeared just a couple of weeks ago in the Tampa Bay Times. And its headline, Florida Insurance Companies Steered Money to Investors While Claiming Losses, study says. Its reporting was based on a draft 2002 consultant study for the Office of Insurance Regulation. The Times wrote, quote, "While Florida insurers claim to be losing money in the wake of Hurricanes Irma and Michael, their parent companies and affiliates were making billions of dollars." When I first read that tagline, I kind of chuckled to myself and thought, if they're making billions of dollars, why are there only about 40 companies writing almost 8 million policies in our state? There should be 300 or 400. And so that begs the question, quoting again how this article continued and went on, the study revealed that as the industry was ailing and companies were losing money, executives distributed $680 million in dividends to shareholders while diverting billions more to affiliate companies, which included MGAs. Again, billions of dollars, a secret report, a smoking gun. Lots of drama, huh? As usual, there is more to this story. And I have, and with a guest today, to give you, our listeners, an important update. The timing of the publishing of this Tampa Bay Times article was very intriguing to me as well. It came out just a week before the start of the Florida Legislature's 60-day session. The session includes several bills fronted by the trial bar that would undo the key insurance consumer reforms passed in 2022 and 23, including the then elimination of one-way attorney fees for plaintiff lawyers in property insurance lawsuits that were so important in revitalizing the insurance market's recovery that we've seen over the past 14 months. The minute I started seeing this latest headline, and several other papers picked it up and TV stories, I called several agents in the state and I wanted to do a gut check. What do you think's happening in the insurance market? Do you believe that there are nefarious characters in these insurance companies that are stealing money and funneling billions of dollars out of their front door into their back door? And the notes and discussions I had were very refreshing. One such agent that I talked to is joining us today on the Florida Insurance Roundup, Alan McGinniss. Alan has been in the insurance business as a licensed insurance agent and the principal of McGinniss Himmel Insurance Agency 20 years. He started with State Farm and he transitioned to be an independent agent in 2009, co-founding his very own agency in 2015. Alan, thank you for joining us.
Lisa, thank you for having me.
Absolutely. So, Alan, I am just so fortunate to have served as a regulator in the Office of Insurance Regulation, then the Department of Insurance. And I am a current consultant and spend a lot of time working with insurance companies that write about 25% of all of our almost 8 million policies in the state. And I'd like to think I have a pretty good understanding of the companies and how they function, how MGAs function in the marketplace, but you live and breathe this every day. So let me start with a simple question. In your mind, working with an MGA inside an insurance company, maybe a brief history, because there really are two kinds of MGAs. There are MGAs internally within a company, and there are MGAs that serve as independent outside a company. So talk to us about managing general agencies, Alan.
So a managing general agency, it probably helps to back up just a little bit and get kind of an idea of what an insurance company is. Because an insurance company, at its very basic, is a checking account that sells contracts. So there's money that goes into an account, and then they write insurance policies, contracts that say if something bad happens, if you experience a loss, here's what we will do to put you back to pre-loss condition. It sounds easy, but the actual administration of the company takes a lot of effort, and oftentimes it helps to get people that are specialized in particular areas of the insurance industry, and so that's where an MGA comes in. They'll get specialized knowledge in different areas, different functions of the insurance distribution channel, the policy making, the reinsurance contracts, reinsurance treaties, negotiating those things. So an MGA provides those services to the insurance company.
Gotcha. So, I like to think about the term third-party administrator. That seems to be a function, these duties that are being done outside of the insurance company. I mean, they could individually contract with an individual claims company or an individual underwriting company or an individual reinsurance group, but instead they use an internal operation to help them get these things done. Is that the way to look at it, Alan?
Correct. So if you work with a whole bunch of people that are independent and they work with a whole bunch of different other carriers or whatnot, you end up with lots of different ideas and lots of different philosophies on how things are done, and they've got lots of different priorities. But if you have one that's essentially captive, a group that is there to function to serve what it is you need done, you can get a lot more things done a lot more quickly. You can make sure that when the time is needed, you've got the claims people that can hit the ground running. You've got the people to handle quick changes in the industry as they come up, those sorts of things.
Gotcha. When you read this story a week and a half ago, what was your reaction? Was it shock and awe? Was it just another newspaper story to sell newspapers? What were your thoughts about it, Alan?
No, when I read it, I thought, yep, session's starting soon. Everybody loves to hate the insurance industry. That's fine. We're here to take care of people when bad things happen, and bad news travels faster than good news. Lots of people get taken care of by insurance companies every day, but no one talks about it because it's not sensational. So only when something sensational comes up does it make the news and come out. And so I read it and thought, well, that's a bit frustrating because it's only a small portion of what's actually been going on, and it's only one side of the story. And it's also just a little bit, I think, naive in how the insurance industry works and how it was worded. I read it and said, well, yeah, the MGAs did make millions, billions of dollars over that period of time because the Florida insurance market, it's a $20 billion premium market every single year. And insurance companies typically spend 35% of the premiums on administration. They've got to mail out forms. They've got to comply with regulation. They've got to underwrite policies. They've got to inspect them. They've got to pay claims. All that stuff is very expensive. And so, yeah, if you spend 35% of $20 billion, it sounds a lot like $7 billion a year on expenses. And that, to me, from running a business, if you have 30% in expenses and then you still got to pay for reinsurance and you still got to pay for the actual claims, it's real hard to keep it under 100% combined ratio there. So he tells half the story and makes it sensational because it's got big numbers, but there's no other side to give parameters on what he's talking about.
Well, that's why I'm glad you're on this show for that matter. So after you read it and just shook your head, you decided to write a response to it. And that's what intrigued me and got me to invite you on this show. So for those of you that haven't seen it, we will put this in our show notes. But kind of summarize some of your thoughts. It reminded me of, when you are either upset or angry about something, you let your fingers bang on the keyboard and then you published it. Yeah. So tell us what your thoughts were and what you put in your piece, Alan.
I really just wanted to let people see kind of the other side of what was being talked about as simple as possible, and just kind of point out that, hey, when you're talking about one side and not the other, it's not particularly fair. And so here's the other side of that coin. Here's the way this works. And lots of people fall into this category. Somebody reads an article about an industry and they think they're an expert on it. It's not the way it works. So I felt like someone needed to point out, hey, here's how this actually works. Here's what's going on. And that's not to say that every single insurance company is perfect. No, they're all run by humans. They all make mistakes. And, I'm not going to even necessarily defend all of them. If some of them went out of business and they shoveled money out the door while they knew they were going away, then look at them. But that's not what everybody's doing. That is not what the majority of the insurance companies are doing. So it's like any industry. There's always a bad apple. And unfortunately, the saying, one bad apple ruins a barrel, has been around for a long time, because you get that one bad apple and now you think everybody's that guy. So, attorneys, they drive us nuts. You know what? They're important to the ecosystem of all this stuff, because they're there when bad people do things they're not supposed to. They're there to punch them in the face and have them turn around and do what they're supposed to. But they're not all bad. Same thing with insurance companies and insurance executives and all those things. They're not all bad. The vast majority of them got into the business because they wanted to take care of people, and they found a way to do it in insurance. And that's how I got here. That's how, talk to anybody in the insurance world, they'll all tell you, I didn't start out to be in insurance. Well, a couple people did, but most people don't start out to be in insurance. Most of us fall into it because we realized it was a good way to take care of people, which is what I wanted to do with my life. And, couldn't handle blood. So doctor was out. So here we are.
We are glad you're in the position that you're in. So let's talk about what happened yesterday. And I'm taping this in the first week of the legislative session, and the session kicked off March 4th, Tuesday. And as usual, the floor of the House and Senate, as they call it, the chambers, full of flowers, very jubilant time. Yet again, another legislative session. And as is typical, the House Speaker and the Senate President do their opening remarks on the opening day of session. At 10 o'clock was the House Speaker, and 11 o'clock was the Senate President. And I'm going to read to our listeners what the Senate President said in his chamber, and then I'll read to you what the House Speaker said in his chamber. The Senate President said, "We'll hold insurance companies accountable for the rates they charge and the services they provide when disaster strikes. They're not going to manipulate the system, and neither is any other industry, not on my watch." The House Speaker, Daniel Perez, when referencing the recent Tampa Bay Times story, was questioning Florida carriers and the relationship with their MGAs and affiliates in his remarks. He told the members of the House of Representatives, "This report may suggest some insurance companies were using accounting tricks to hide substantial profits, while telling us they were in crisis. I have asked the Insurance and Banking Committee to conduct hearings, and they will have access to the full range of tools, including issuing subpoenas, putting witnesses under oath, and hiring outside experts." And then the governor weighed in. Governor DeSantis pushed back on House Speaker Danny Perez during a press availability around noon on Tuesday, March 4th. In his questions and answer session, you need to listen to what the governor said.
I think that there was a report about 2017 to 2019, and there were parts of the insurance, the way it worked, that were not even subject to oversight. But the reforms in 22, now that's all subject to oversight. Having oversight over those particular entities is something that is now in Florida law. It was not in Florida law at the time, that this alleged happened. So I'm not sure whether there's examples of that since then that OIR has not done. I know that they look at the books very closely. If there's things that need to be done to be able to make sure that we have transparency and appropriate oversight, I'm all for it. What I am not going to support is opening up the litigation floodgates. The fact is our markets were being driven into the ground because of excessive litigation. We had 78% of all litigation costs nationwide with 8% of the claims. What killed me on the statistics is most of the litigation was Dade, Broward, and Palm Beach. They haven't been hit by hurricanes in the last 10 years, maybe a little in Dade and Irma, but Broward and Palm Beach haven't all, and yet they have all this. Why? Because it became a cottage industry. So if you want to have situations where lawyers will get hundreds of thousands and the policyholder will get 40 or 50,000, just know you are going to destabilize the market and you are going to see things spiral. And just think about where we are. This is not easy to do, but you have major hurricanes. We had 3 significant storms, right? And 5 years ago, people would have said if that happened that the whole markets would just collapse. No one's saying that now. So far, the rates that have been filed with the Office of Insurance Regulation are 2%, 8.8, 0.2, 0.8%, 1% increases. That's a sign of stability. So I think folks have entered our market, unlike California, some other states where they're fleeing the market. And what they want to know is that this business environment is going to be stable in the state of Florida. And I know I've spoken with members of the Senate. This is going to be stable in Florida. Like what has been done is going to remain.
Very insightful from the governor, where he really focused, to me, on the crux of the issues we've faced in this market 2, 3, 4 years ago. And you'll recall from his remarks that we've let you hear today, whatever happens, he will not support bills that open up the floodgates again for litigation. And he, our governor, was the very one in 2023 to say, we are stopping the billboard lawyers. And that was very telling. So, Alan, I'd love your reaction to the House Speaker and his admonition about subpoenas and hearings and witnesses, what the Senate President said with respect to holding insurance companies accountable, and then what the governor said.
You know, for me, the only thing I know about politics is poly means many and ticks are blood-sucking insects. So I try to stay out of it. The political side of this stuff, I understand why they have to say what they have to say, because there's been, people are frustrated because they've heard one side of a story and they think they've gotten it all. So they're saying what they're expected to say. I was really glad to hear the governor reference the OIR's Property Insurance Stability Report from July of 2022 that showed the details of what was happening in the Florida insurance market. And I love it. It's a 23-page study, deep dive into what was going on, what the losses were, what the gains were, all those things. And me and probably the other 4 people that have read the whole thing probably love it because it just shows exactly what's going on. I would encourage people to go and read that report. And there's a couple of pretty obvious pages that show that in 2015, 2014, insurance companies were doing well and making money, and people were getting claims paid, and life was good. And then 2016, 2017, things started to change. And then all of a sudden, we found ourselves really, really close to the edge of complete collapse because the domestic homeowners carrier market, property carrier market, lost over $1 billion in each of those 2 years. And you can see how all that's completely correlated with the litigation boom we had. So his comments about not going back to that are heartening, but we need to make sure that everybody continues to stay the course on the don't have a knee-jerk reaction. What has been done in late 2022, early 2023 is working. We are seeing rates not go crazy, even though we've still had inflation in the last year or so. We haven't seen rate increases get filed. We've seen a couple of decreases. We finally had some carriers where the rates are flat, and you can't expect to get out of something like this in an ultra regulated market super quickly. It took us 10 years to get into the mess. It's going to take a minute to get out of it.
I really appreciate your perspective, and I think you're right. The governor recognizing the real numbers that are there. I mean, I think when these hearings do happen, and I was speaking with a colleague in the Capitol this week, and he said, this is really a good thing because it will underscore and reconfirm the insurance commissioner's resolve and statistics and data that the market was really in trouble. So you're on the right track. Couple more thoughts for our listeners today. You wrote a piece that, really, I think showed, your thoughtful opinion and perspective based on your many, many years of experience. And so did former Florida Insurance Commissioner Kevin McCarty. And I'm going to read a couple of things that he talked about in his response to this story, and that will also be posted in our show notes. He said, misconceptions about insurance company profitability or affiliated transactions often overlook the significant expenses of running a property insurance company, including reinsurance and claim payouts and operational cost. In reality, most insurance companies operate on tight margins and must engage in responsible financial management to remain viable. The Office of Insurance Regulation has a robust financial oversight framework to regulate affiliated party transactions and prevent unlawful or excessive asset distributions, contrary to some recent assertions in the media. I want to remind our listeners that I was a former deputy insurance commissioner, and I worked for Commissioner McCarty, and he laid the groundwork for the commissioners after him to make sure they stayed keenly aware of the operations and transactions of insurance companies and those companies affiliated with them. This insurance commissioner, Mike Jaworski, can ask an insurance company anything, anytime, anywhere, and has unfettered access to all of their financial reports. And for anyone to insinuate otherwise is wrong. Having been there in the chair, working with great commissioners like McCarty, and now seeing the great work of Jaworski, Commissioner Jaworski, I have no doubt that these hearings that will happen will underscore Commissioner Jaworski's heavy and tight regulatory hand. As a matter of fact, recently, the Office of Insurance Regulation, in a quote, stressed that the study, the focus of these media stories, was made before the agency gained additional oversight over managing general agencies from the legislature and their affiliate fees in 2022. Since then, OIR has canceled or modified a number of MGA agreements, and they reiterated that the report does not clearly show where the capital was spent or concludes that all the monies were profit. The report does say that additional oversight was needed, and the Office of Insurance Regulation read that report. They went to the legislature, they got additional regulatory oversight, and they continue to advocate for more regulatory control over MGAs, and that is straight from the Office of Insurance Regulation. Commissioner McCarty's piece went on to say, excessive litigation was a major driver of Florida's past insurance crisis. Recognizing this, lawmakers enacted strong reforms to curb litigation abuse and promote market stability. At the same time, they enhanced the insurance commissioner's ability to hold insurance companies accountable. If companies fail to properly adjust their claims and they don't do it promptly, Commissioner Jaworski now has a dedicated deputy commissioner and a proactive team tasked with enforcing insurance company claims-paying practices. To say that Florida has the most, and this is my opinion for our listeners, has the most and most stringent regulatory environment in the country is an understatement. And the insurance companies cooperate, they pay their claims, and when they don't, they are held accountable. So, to close this podcast, Alan, if you were king for a day and you wanted the entire public to know what you know about insurance company practices, what would you want them to understand from this podcast and your experience?
That's a good question. I think what I'd want them to understand is that profit's not a four-letter word. Carriers have to make a profit in order to stay in business. That's just part of how it works. Insurance companies, when they're making money, are much better able to take care of their clients. I can remember back in 2011, 2012, we had an insurance company whose standard practice was to essentially overpay on claims. They looked at it and said, we have to pay within the policy language, but we can be aggressive here and there and pay things that are borderline because it's the right thing to do. It takes care of our customers and it makes the agents happy. And you guys do a good job selling our policies. So back when the market was working, there was lots of competition. It was great. There was, if somebody had a problem with one company, they didn't like it, we'd move them. And it wasn't that big a deal. That's the way it's supposed to be. Over the past 10 years, we've slid into a major problem and allowed things to get way out of whack. And we finally did it. March 23, things were changing. We've just got to stay the course. It's been 2 years. It took 1 year just for the insurance companies to say, okay, those reforms actually did work. They didn't get holes poked in them again by the Florida bar or the attorneys or the courts or anything like that. So, hey, we've seen it. Now we can start working on making changes. Takes time for changes to work their way through the system because they've got to get the data. They've got to make the filings. The filings have to get reviewed and discussed and refiled and then approved. And then it's got to get programmed into their systems. And then the policies get out to the customers. It just takes time in a market that's regulated the way this one is. And we're almost there. We're seeing the carriers get much more aggressive on trying to write policies, which is a great thing because competition is going to bring the market back in line, and it'll be just better for Floridians overall.
That's very, very thoughtful, Alan, and thank you for sharing that. And I did want to remind our readers, if carriers, insurance companies, I like using the term insurance companies, if they don't respond or they are lying, and being untruthful about their business dealings and their finances, many of these companies are publicly traded, and they'll go to jail, right, Alan? I mean, you don't to insinuate that these company executives are intentionally concealing and lying and doing things that are not in compliance with insurance laws is just wrong. But I will, go ahead, Alan.
That's a situation that is just people looking for a problem based on what they think is a problem. The other part about it is these insurance carriers, they've got regulatory agencies watching them. They've got rating agencies watching them too. They've got several different rating agencies that look at their financials, help us learn and know what's going on in the company to try to figure out how financially stable they are. And then on top of that, they've got independent agents out there looking at them and going, hey, if I don't think you're doing it the right way, I'm just going to put my customers with someone else. So there are so many eyes on what they're doing that I'm sure they could try to do something shady like that, but the likelihood of them getting away with something like that is just so far beyond imaginable. It's crazy.
Well said, Alan. So again, the point of this podcast is to educate our listeners that this smoking gun secret report is a farce. And we applaud the insurance commissioner for clarifying that, and we will listen out for him in the days to come. Alan, thank you so much, for your perspective and your deep knowledge and critical thinking about what goes on in this marketplace. And I want to remind our listeners, Alan is a seasoned insurance executive with the McGinniss Himmel Insurance Agency, headquartered here in beautiful Tallahassee, Florida. Alan, thank you so much for being on the program.
Lisa, thank you very much for having me.
And as many of our listeners know, good data begets good policy. Public policy is always better with the right data. The Office of Insurance Regulations Consultant Report recommended that insurance companies and their MGAs and affiliates update their forms and their data provisions because some of these agreements were old and that they needed to keep up with the times. And that's exactly what the Office of Insurance Regulation has been doing for the past several years. I would conjecture to say that the Office of Insurance Regulation didn't just sit on this report, as these articles have insinuated, and critics are accusing them of doing that. In fact, just the opposite. When you have the Office of Insurance Regulation coming out publicly on a piece that was published this morning, and I'll reiterate it, on March 5th, that the study was made before the agency gained additional oversight, and as part of the 22 reforms, and even after that, they have gotten additional power and regulatory oversight over these affiliate and MGA agreements. So I applaud the Office of Insurance Regulation for moving ahead with bills in the legislature that stress what needs to be done to keep their eye on affiliates and all the transactions of insurance companies. What we don't want to have happen is exactly what the governor said, to try to erode the legislation that eliminated the one-way attorney's fees, that would contribute anything to more insurance company insolvencies. We lost almost a dozen companies in the past 5 years, and we don't want anything that would contribute to higher rates for consumers. And all this uncertainty in the marketplace with, very incendiary reports and media reports causes that uncertainty, which can lead to higher rates. It would seem that the Office of Insurance Regulations consultant summary is serving as a guidepost for OIR, and it doesn't seem like the report was shelved. As a matter of fact, it was embraced. In our show notes, we'll have a link to the Tampa Bay Times article as well as Alan's piece and former Commissioner Kevin McCarty's essay. And we'd love to hear your perspective. What do you think we can do to improve the Florida insurance market? So many of you give me great feedback about that. We always like to hear from you, our great listeners. You can call us at 850-388-8002. That's 850-388-8002. Or send me an email at Lisa Miller at lisamillerassociates.com. And please follow us on Twitter, X, and Facebook, and LinkedIn, and everywhere you can. Make sure you share things far and wide so we can educate all those in the marketplace. And we really want to stay in the know. And if you want to stay in the know, go to our website at lisamillerassociates.com. You can sign up there for our free newsletter and get notifications of future podcasts. So thank you so much for listening and being supportive and following our work. And remember, at our firm, we have a passion for good public policy and client success. I'm Lisa Miller. Until next time, stay safe, Florida.
This has been Lisa Miller and Associates Florida Insurance Roundup, your podcast on the people, issues, and regulations shaping Florida's insurance market. For more information on today's program, please visit us on the web at www.lisamillerassociates.com.